A big hello and a very warm welcome to Brand Equity with me, Sonali Krishna. Well, this week we're coming to you straight from MADISON World because we're going to be talking about the MADISON report, which talks about the year 2023 and its performance of the industry and, of course, outlook for 2024. And who better than the veteran Sam Balsara and the very, very charismatic Vikram Sakhuja to pour us insights into what's taken place for the year gone by and what the year going forward is going to look like. Well, thank you so much for joining me, Sam and Vikram. Truly a pleasure to be having you on Brand Equity.
Our pleasure.
Starting with, what is your overall outlook of our performance in 2023 basis the numbers that have been put out?
Well, as a top line, obviously I am a little disappointed. As our headline says, AdEx hits a speed breaker. We've said that because against our original forecast of 16%, which you could consider a little bullish, we've ended up with a 10% growth because, there were a number of sort of continuing factors which pulled AdEx down, especially in the first half of the year. The first half was really very poor. It's only in the second half and especially in quarter 4 that AdEx lifted up very well. But you could argue that 10% is good in today's world. Globally, AdEx grew at only 5%. And the top 11 economies of the world, or at least the top 11 AdEx markets, grew only 2%. So I don't think we should complain too much.
But maybe it's time to look at the reality, with a naked eye. Like I've seen this year on year, different agencies come up with different reports. Of course, you and Group M being, the ones who come out with their report every year. But at every point, we're asked, whatever the performance may be, we're asked to look at it in context with other countries and in context with the global AdEx, right? And we've been 8th in the pecking order in terms of,
No, actually, 8th should not give us much solace. The point is we are only 1.2% of global AdEx.
And that needle has not really moved, has it?
In a very small way. I think earlier we were less than 1, and so very, very slowly. See, the point is total global AdEx is now about 970 billion. That's nearly $1 trillion. So out of that, US alone accounts for 31%.
Sure.
The top 11 markets account totally for some 67%. We have a lot of catching up to do, but look at it on the positive side. The upside is phenomenal. Advertising still as a percent of GDP is only some 0.35. In many other markets around the world, it's 1%. So economy is growing. I'm sure with time to come, this percentage is going to grow. So we'll have a double whammy. So Sonali, you're going to get very busy in the years to come.
Well, I hope so. But I want to bring you back to the current reality since we're discussing the report card. And I want to ask you, what is the reason of the report card or 10% growth vis-a-vis, the MADISON expectation of 16%. Why has there been, a dimming of growth, so to speak?
I think there are two fundamental reasons, according to us. I think one was a reason that was, I think, very nicely identified by our in-house economist, Nagaraj. He says, whilst most of us look superficially at the GDP and say, 7.3% is pretty good. I believe the GDP is comprised of 3 different components. And one of the key components, at least as far as we are concerned, is private consumption expenditure. And that component as a percent of total actually has come down. So this, in a way, tells us what we somehow felt is that, the growing middle class in India for some time has been a little constrained because, their salaries and incomes are not really going up.
Sure.
And on the other side, there is inflation. So their ability to buy discretionary products or even, day-to-day products has been a little
squeezed.
limited. I think that, to my mind, has affected, because that is the core where, mass products sell. The second reason is not a very nice reason, I feel, and I think that is where India Inc. gets it a little wrong. I think there's over-obsession with quarterly profits among listed companies.
Sure.
And I think there is perhaps a mistaken belief that, analysts who track these stocks, month after month, if not quarter after quarter, are going to sort of put out a very negative outlook if the quarterly profit dips. I think that's not necessarily so. I think in a country like India, I think if you can't grow your volume, then where will you grow your volume? So I think there is not enough focus of companies to grow their volumes. There is focus on managing the bottom line. That, I think, is not good for long-term sustainability and of profitable companies. Because you can't, I think, grow your company year after year by just managing the quarterly profit.
I think another reason, if you look at it, is if you break up our entire AdEx, print and TV have gone down a little bit, but that's just a small amount. The real drop has been in digital from about 25 to 15.
Right.
And I think that's where maybe the startup and the e-commerce entire piece, I think there has been some kind of a slowdown there. If you look at the construct of the AdEx, we find that while FMCGs continue to really be the bedrock of Indian advertising, and autos also have had an amazing resurgence, the e-commerce, while strong, it's still, the share has come down, and the startup piece is completely sort of dried up. I mean, EdTech, FinTech is for everybody to see, and I think that's symptomatic of some of the others. So the investment winter, whatever, which is continuing right now, I think that's also had a role to play.
So this digital coming down, while you've given me your points, is it also because a growing sense of skepticism amongst marketers to be investing in digital, or you think that's only going to go up simply because questions of efficacy, measurement, and all of that which have come up in global conversations are also trickling down finally to Indian marketers, and that obsession is tapering? No?
I think digital works very clearly, and I think advertisers, marketers also realize that. So there's definitely more investments going that way. So if 40% of total AdEx is digital today in India, globally it is very, very high. It's probably upwards of 70%. So, and I think India is going to follow that trend. But I think there's one thing interesting in this, which is while these numbers are not that precise, it's more of an estimate, of the entire 40,000 odd crores of digital, I would hazard that maybe 2/3 of that, maybe a little more, is all performance. Now, performance you can't argue with, because finally you're going after sales, leads, all that. So that's you're actually getting the results. The part which to my mind is the imponderable, it's still people are putting the money behind it, but I think we need a little bit more currency measurement, is the entire branding piece. Because video is now becoming a very big part.
Sure.
And just reliance on the media owner themselves giving you what the reach is, what the impressions are, I just think it's not a good practice. We should have industry currency measuring that.
But Vikram, you're talking about the Facebooks and Googles of the world and their peers giving out measurements. they've claimed that there is third-party data now, third parties who are now involved in measuring this, and this conversation of they being walled gardens being dropped and becoming more inclusive and giving out more transparency has been on for a while. Do you see that change happening anytime soon?
Look, finally the change will or won't happen depending on the position that advertisers take. It's their money. At this point in time, are they comfortable with actually spending huge amounts of money on digital without the kind of accountability, transparency and objectivity that you need from a third-party currency measurement?
Sure.
So currently, I'm not saying these companies they're good companies, they're great companies, but I just think it's bad practice to be able to just give your own data and that becomes gospel. For the longest time, I mean, you look at the entire TV environment. We used to look at a third party monitoring to pay our bills regardless of how kosher or respected the actual broadcaster was.
Sure.
And that was a perfectly decent practice. I just think it's good governance. And when so much money is going there, there should be a currency. And for example, we don't have an AdEx. How crazy is that the sector which is the largest by far in terms of AdEx does not have an AdEx?
A reliable AdEx.
I mean, we have to get it from triangulate, ask people, but nothing is measured.
Yeah, and how is that okay with marketers? I mean, you know, both of you have spent a lot of time and have great relationships with companies across sectors. What is their view? People are big spenders. Aren't they pushing for this? Aren't they like kind of trying to use their muscle to tell these publishers that it's time?
We've come to the conclusion that they should not be. But unfortunately today, the way media research is organized, we do it separately for each medium, and then for each medium, the dominant owner or contributor to the research is the media owner.
Sure.
We think that should not be. The dominant media, the dominant research owner and contributor in terms of money should actually be the advertiser, because the research is being done to help the advertiser objectively decide, where he should be spending his money.
I did a back of the envelope. It's if you have to the entire amount that we spend on measurement of audiences in India from a currency standpoint, even if you take digital measurement, which I made an estimate for, it won't be more than 0.5 or 0.6% of the AdEx. Now, it's a perspective. So for advertisers, would you be willing to take a good share of that 0.5 or 0.6 in order to actually get a good, transparent and accountable return on the 100%?
Right. But is this going to change in the near future? Or it'll take a lot of lobbying and large advertisers using their muscle, somebody like Mark Pritchard, who's been the only one who's actually been shouting out loud, but representatives like that across to be talking and showing more muscle strength with these people to actually make that change.
I think if there were more Mark Pritchards, the world would be a better place. I think the other place I look to for guidance and some hope, the UK is the Advertisers Society is called ISBA. They've embarked on something called Project Origin, where they're actually trying to do a cross-media measurement. They've got some funding from the digital broadcasters. My understanding is the digital publishers, the TV broadcasters, I think, didn't want to take part at that point in time, but they're still managing to do it with the advertising leadership to actually do this cross media. And now we are at the stage where it's moved from pilot to actually getting the data out. So it's at the cusp of that as we speak. So I'm really, really in 2024 eagerly looking out to see how that goes. When we talked to one of the leaders in that entire ISBA, Phil Smith, he was hoping that by the third quarter of this year, we'll actually see some pretty significant movements on this entire cross-media measurement in UK. And this is coming entirely on the back of leadership from advertisers. So I'm taking a lot of hope from that.
Okay, and then once that we see some success there, we could possibly take that model and...
Yeah, and they've taken
Correct.
World Federation of Advertisers models, so all that the good practices, advertisers are very, very smart and they're really good. So if only they had the will to also, it's because it's tiring work. We as agencies do it all the time, but it's very tiring work to bring about changes in practices of industry. So I can understand they have their own businesses to run. So to take on an industry cause can become a little bit of an onerous task, but I think it's the end is worth it.
What is the fate of TV looking? It's still the dominant part within the traditional setup, but we've seen it kind of, come down in percentage points year on year. How are the next 5 years looking for TV?
I think it's not looking too good. And I think, at least from an India perspective, it's not because advertisers don't have confidence in television. Talk to any large advertiser and he's spending 75% of his total budget on television.
Still.
Today, okay? Maybe 60 to 75. I get the feeling that the broadcasters themselves seem to be giving up on television. Somehow they seem to think that the future lies in digital and OTT and all of that. Because I think maybe everybody is now connected. So they're seeing what is happening around the world, especially in US and all that. One thing is true, that even in India, a lot more of younger people are sort of giving up on linear TV. They've moved to digital, connected TV, mobile and stuff like that. So there is no doubt that if you want to reach 100% of the people, you can't do it with television alone the way we used to do it earlier. Especially for those light audiences, you need to supplement your TV plan with quite a bit of digital video.
So if I may supplement what Sam's saying, definitely we're saying that if you have to build a brand, and a TV film or an audiovisual ad is a very, very powerful tool, will continue to be a tool. Will that platform be TV on which they see it, or will it be something like a digital? That is, I think, the question to talk about. When we're talking about digital overall at 40,000 crores, like I said, a large part of it is performance, which is strictly speaking not the same as TV. So if I have to just break up even this, in 23, TV was about 33,000, and of the 40,000, about 13,000 was video. So you're really looking at about 30% of the total video, 33 plus 13, was actually a little over 30% was with digital, and about 70% was with TV. The same numbers in 22 was 25-75. So share of digital has gone up.
Sure.
Will it continue to go up? Yes, it will in the entire AV piece. But will TV have a role to play? Absolutely. And I think the segmenting is going to become important, because like Sam was making a mention, 40 plus people, more women, some of those, the best place to get them is on TV. Even South India, I think TV still remains a better option overall to reach your consumers than digital.
But then why are broadcasters and why are revenues for broadcasters under stress? We are seeing more and more kind of tension building up. If there is the confidence?
One major reason why broadcaster revenues are under stress, as I see it, in the recent past, till our startups were well funded and were able to see a very rosy future, they were spending on and buying up sponsorships of all the expensive properties, which were very remunerative for the broadcasters. Today what has happened is that layer has gone missing. So it's only the hardcore advertisers who have remained, and they obviously know how to use advertising, how to get the ROI from advertising and all that. They're not taking seat of the pants decisions the way startups used to do. So I think that has had a substantial impact, I would say, on broadcaster revenues.
I mean, again, on that point, I think in 22 we had 5 of the top 10 advertisers in India being startups. That number is only 1 in 23, Dream 11.
Yeah.
Yeah. And that number,
Yeah.
I think on 21 was even higher.
Yeah, much higher.
So now, if, take a look at it, they are big spenders. They're spending on the big properties, whether it's the IPLs, whether it's the Big Boss, whether, all those very, very, very high ticket items and paying good pricing. Now, if you suddenly find the bedrock of advertising going back to the most reliable, ever reliable FMCG, they do expect, they want to build, they're always on. They want to build reach at the lowest cost. So the fact is that they may charge less, but they at least can offer a certain consistency of business.
And reliability.
Yeah. And so I think there is going to be some kind of a reordering of value that is being extracted. But yeah, I think that's really coming, the decrease is coming because the high value app properties are going down.
So what would be your message to broadcasters?
I think have confidence in the medium. I think, India is going to be a long time till TV goes down so dramatically. I mean, globally, I think television next year is expected to be only 15%. But in India, our expectation is that television would be 33%. So I think television has still a long way to go in India. Advertisers love it. It does give the best possible, reach even today at a very efficient cost. So advertisers are not in a hurry to give up television as I see it.
I think a narrative which advertisers can also attempt is the attention one. Now, the fundamental difference between broadcast or reservation buys, or whether it's print or TV or whatever it is you take a spot or a space in a paper or a channel and you get the audiences around it. So you know the environment in which you're advertising. To digital, by and large, you're giving them an audience, and wherever that audience is, they're placing your ads. At best, you're saying, please exclude this environment or that environment. But today, say on YouTube, I don't know whether my spots are being seen on a movie or on a comedy show or on a recipe or a do-it-yourself or a cartoon and things like that. So and also if you have to look at it, how you process an ad on a movie or an entertainment show versus on a feed of a social media is completely different. We are working with somebody from Australia on capturing for every 10 seconds of an ad, how much did you have actual attention on, whether it is active attention, passive attention, or non-attention. And it seems that it could be from anything from 2 seconds to 8 seconds. Now, up till now, we've only been talking viewership vanilla. But the minute you put a attention filter on it, it could change the narrative. Right now, nobody's really talking this language. I think people might start doing that.
I have a counter as just a consumer, right? A person who consumes these things. I'm sure you have, your children, your family. When I'm looking at a YouTube ad, if I can access the skip button, I'm the first to go and press it, as the case may with you and you would be. If I'm forced to watch it, I don't think I'm really watching it. I'm still waiting for it to pass because I'm just being coerced into watching it. Similarly, when I'm scrolling, it might take me some time to understand the skip button and press it. But if you're counting 5 or 8 seconds as somebody who's consumed the ad, don't you think those are very misleading metrics?
Yes. And in our same Pitch Madison session, we had Balki there. And Balki said the same thing. He says, it's so irritating and you're waiting to see have the cross button which you can put on it, skip button. So somewhere along the line, the challenge that he was giving to the industry is you've got to make your advertising at least as interesting as the content which they're viewing. And the reality is, I remember it goes back maybe 20, 25 years back, India used to have the lowest ad avoidance kind of rates, partly because that time the clutter was maybe less than what was in States and other markets, but also because we used to make truly entertaining ads. Sure. Now I believe maybe some of that good creativity has gone. So I think that's a creative call, and I think Balki's words need to be given heed to.
So just to check what's happening in terms of profitability with this entire kind of shift we're seeing? For instance, in 2023, you've said we were at 40% digital share and 60% combined traditional. What does that mean for you guys? When our share of digital is going up and our share of traditional is going down, do you make less money on digital, as some people state, versus traditional, because the structure of remuneration is different, and so if the digital share keeps going up as is expected, that's going to get further squeezed?
There's no doubt that to do the same service on digital requires maybe 2 to 3 times the resources. The way campaigns have to be set up, the way they have to be real-time optimized, the work involved is much, much more.
Sure.
And also typically what happens is like in a TV, you send one release order for large amount. Here you're sending for small amounts and having to do a large amount of work. So work is definitely much more. As a result, the commissions on digital have to be higher than traditional. And pretty much that is what it is even today.
They are higher than...
Yes, of course they are.
Yeah.
Absolutely.
Okay.
But within that, even in the 3 years of I, we've been having some very constructive conversations, and there are certain guidelines that they are exhorting all agencies to sort of work with, so that we can actually give a good service without going into the red. So I would say at this point in time, it's sort of checks itself out. If we have to make sure that we charge accordingly. For us, it's all, at the end of the day, we work out to constructing what is going to be the team required to do this job, and then how to cost it, and then that translates into differential commissions.
But my question is, what is a more profitable medium to work with? Like, is it still traditional, or is it digital, or it doesn't matter?
Well, Vikram answered it saying the cost for us to service or handle a digital placement is much higher than it is for traditional. Most clients compensate us accordingly. So therefore, we
don't let that enter into our thinking in terms of what is more profitable for us. Finally, you're making a plan in a pretty media agnostic sense. So you're doing whatever is right. Sure. Some people have 100-0 digital, some have 100-0 TV, some have 70-30, whatever. But you do whatever is right. At the end of the day, then you just make sure that you're getting remunerated fairly for the kind of work that you're doing.
I'm assuming this is a media perspective, because if you talk to creative guys, to them the TV mainstay is
the ultimate high.
Absolutely, versus a digital creative, because it's so much cheaper and the remuneration is also commensurate. Although the work, as you're stating, is actually much more for digital, but that is not coming through. But because more and more clients and brands are demanding for more digital work, that pie is becoming bigger and bigger. That's why I asked you, how does it work for a media agency?
So I think I said how it works for media.
No. But would you agree with that, with the creative bit?
Creative, yes, of course. Because you see, the life of a digital film is 1 week or 2 weeks. The life of the film, you're making 50 digital films. So obviously you can't spend 50 lakhs on each digital film. So the entire ecosystem for digital creative is a little different. I think that is why you'll find there are a lot of separate digital creative agencies who are doing very well. And for a long time, I think our conventional creative agencies were not able to adapt to this. That's why I think these specialist digital agencies came about.
In fact, at that point, if I take a historical reference, at the time when FM radio came, we used to get sound edits of TV commercials because it didn't make sense for people to make a $30,000-$40,000 rupee spot on radio. Finally, what happened was FM stations hired very good creative talent, and for the cost of a media plan, gave you the ad as well. I think in outdoors, we used to see the same. Print renders used to come for outdoors. So many years back in Madison, we got our own sort of digital creative team in out of home who could actually do adapts to suit this. And it's actually helped us win a lot of business. Same now in digital, because when we realized that for small stuff, whether it is social, whether it is Insta Reels, whether it's creating a basic content, whether it is adapting films to to a YouTube kind of environment. We have our own creative team out here, which is not got the same ambitions or scale or something of a conventional creative agency, but is able to deliver those goods. So we are sort of trying to organize ourselves in our own small way to manage those challenges.
Sure. Coming to a more macro question, you had stated that this 2023's performance has been the lowest in 6 years.
Yes.
Right.
Growth in terms of growth rate.
Lowest
Yes.
growth in 6 years. What is your outlook for 2024? According to clients and marketers, they're finding that it's going to be a tight year because consumers are also getting a lot more tighter with their purse strings. We're seeing purse strings. We're seeing a lot of layoffs already starting as we have embarked on 2024. So it's not looking as buoyant as people would like us to believe. Would you be in agreement with that? And is it going to be a tough 2024 for us?
We projected a 12% increase.
Yeah.
Whilst everything that you say is true, also remember that, elections are coming up, parliamentary elections are coming up. That kind of brings in a lot of money to AdEx.
Yeah.
Post that, we feel that, the government is going to come out with a lot of very bold reforms or measures or schemes or whatever you may call it to stimulate the economy. And I think that should have a good positive effect on middle class people's income, on production and stuff like that. So we think that again, like last year, this year the second half is going to be reasonably strong.
The other point I'd just like to re-emphasize what Sam had said earlier. I think ever since COVID happened, the volatility, the VUCA-ness of this entire world had increased that much more. And increasingly, companies were going for not annual but quarterly plans, and it was really quarter tak kind of thing.
Yeah, absolutely.
And it was all about profit protection. I think whatever we've seen with our own way, and again in our Pitch Madison sessions, we had a superb sort of speech by a BCG person, Abhik Singhi. So he actually did a full analysis which looked at the stock market prices of the top companies, and he found that volume growth has got the highest role to play and not that much profit. And that is exactly the point Sam was making earlier. So the obsession for advertisers needs to be with volume growth rather than just profit protection. Because right now, if you have to look at, again, he was also seeing the kind of growth that you're getting in investments and all. So the growth in investments, the marketing investments is very, very low. Some 1% or something he was talking about, right? So it's actually people right now their entire business strategy seems to be, let's try to save on costs and let's try to actually shore up profits because it's uncertain times. I think they should be a little bit more brave. They should go for growing the top line. And I think it can, if you do it properly, if you segment your markets well, because I think the premium end of the market is doing very well.
Exactly. That's what I wanted to come to you about. Because if you talk to, whether it's FMCG or it's, any other sector, which is consumer facing.
Automobiles, flats.
Exactly. Everybody, the upwardly mobile seems that, and that premium luxury space is definitely growing.
So that is why they call it a K-shaped recovery. So, at the top end, things are going up. At the bottom end, things are going down.
Right. And that trend seems to continue as we embark on 2024.
But we are thinking that second half there should be some correction directionally which should take place. I mean, our government, which is strongly focused on GDP growth and all of that, I think will take some measures to make sure that this large bulk of middle class will stand protected and their incomes will sort of get them little more. And that we believe will happen.
But Sam, that is the bet on the government.
Yeah, it's a bet.
Right? So with that kind of clause, then you're saying that 2024 should look better than 2023.
Yes.
Right?
Yes.
But all things remain constant?
No, I mean, you're now asking me to get a little deeper into it. I think if the current government loses, AdEx could come down to 5-6%, or maybe no growth at all. It's going to be a disaster. Stock market could also collapse.
Okay. You want to add something to that?
No, I think everybody loves stability. There's I mean, at least the general expectation is that the current government will continue with good majority. And I think actually from an overall markets and from an economy standpoint, I think that would be the best. I mean, that's my personal view.
Sure, sure. Let me just come to the next big, darling media, which is print, which is also suffering a slow but steady decline. What would you say is happening in terms of print growth? We are an aberration in any case, I think us and Germany, as a country that still, loves
20%,
sustaining print. But how far is this run, and how fast will we kind of mirror the global trend?
I would say our print publishers should be congratulated for reading the situation quite well. I think the most difficult thing to do for a media owner is to readjust to a new situation. And especially our print and media barons who have been lords and masters for 50 years, for them to accept today's reality is very, very difficult. But I think the fact is that in the last 2-3 years, they are beginning to see it, and rather than just sit and suffer, I think they're doing something about it. If you ask me, today print will give a tough fight to other media, because I think print prices for advertising have also become a lot more reasonable, and I think therefore, the ROI on print advertising, which was earlier quite bad, I would say, is now improving rapidly. And I think those advertisers who are kind of seeing this and recognizing it are benefiting from it. If you see many of the small brands which have all got sold in recent years for big prices have all been built on print. What is that? Kesh King, and more recently, all built on print.
Let's take another perspective. Sure, TV, digital all have 80% plus reach as a medium, right? Medium. Print as a medium, if you look at monthly readers, last we heard was about 35, 36. We haven't got a number read, but let's assume it's still 30. Read in the last 1 month. It'll be about 12, 13 read in the last 24 hours. In today's highly fragmented environment, when you make a media plan, to get a 30 reach on TV or digital is also a struggle.
It's impossible.
In print, you take 3 inserts in a particular market across 2 or 3 newspapers, no more than that, and you've reached that reach. So to say that, it's all very well to say it's less and all the rest of it, but for the people who are reading it, very impactfully, you're able to reach them with very few inserts. And now, as Sam alluded to, there's price correction happened. That's what the print barons have done.
Yeah.
So the revenue growth has been less than their inventory, which they've actually been able to bring in. So there's been a price correction. And I think it's good that they've seen the writing on the wall.
Sensible, I would say.
Okay. So last few comments before I end this interview. Broad headlines and highlights that both of you would like to point out, for this year, which is 2024, but also more importantly, big trends we should look out for and keep our eyes open for the next 5 years for, this industry.
I think the big trend which we saw that settled in last year is connected TV. I think connected TV, as I see it, gives you all the advantages of linear TV, what Vikram was talking about, the attention metric is index of 1, plus it gives you some amount of targeting capability. You don't need large outlays to use television and reach out to a more specific audience with much lower outlays. So I would say that's a no-brainer. I think connected TV, which combines the best of TV and the best of digital, is going to grow very, very rapidly. It does mean that cable and satellite will sort of come down anyway. I'm told the costs are also very high, so more and more homes, at least in metros and all, are becoming cord cutters. So that's one very important trend that's set in, and I think advertisers have to recognize this and take advantage of it. I think the more important thing, as I see it, is for advertisers to recognize that to take advantage of the Indian economy, the Indian demographic advantage, and all of that, they have to focus on volume growth and not just keep managing their bottom line profitability by cutting this, doing this, and all that. What is the long-term plan? I mean,
how can you expect it, Sam? The average tenure of a
that's a
CEO
problem.
is about 4-5 years. Average tenure of a CMO is even lesser. Each one is looking to hit a 6 during their innings. So there is how will we make that change?
Recently I heard 2 talks. One was yesterday from Abhik Singhi, the head of Boston Consulting Group, and I think about 2 weeks ago from Sudhir Sitapati, the CEO of Godrej Consumer. Both of them said or advised agencies, please talk to the CFO and CEO more or as much as the CMO. Because in today's world, it is these two who are controlling the budgets and controlling the purse strings, and not so much the CMO. So surprisingly, both had the same advice for agencies. The challenge for us is they're not always available to us.
Yeah. What about you, Vikram?
I would ditto what Sam has said. I'd add to that I'm finding that in the branding and performance game, branding is all about building brand love, building what your brand really stands for. Performance is really short-term sales, typically discounted. I think the pendulum, of course you need both, but the pendulum has shifted a bit too much towards the performance side.
Yeah.
I think somewhere long-term growth comes from building brand. So I would also sort of urge the marketers to sort of equalize it in such a way that branding spends or other investments in building the brand also get the due share. The other, the big unlock I think is going to be the cross-media measurement, which allows us to objectively look at the entire market in an analog and digital in one consistent manner through a currency, through a third-party currency. That is going to be an incredible unlock.
When is that coming out?
For that it requires, UK, the advertisers are the ones who've initiated this. For whatever reasons we keep, if BARC is the obvious one because they do TV measurement, so they can add the digital piece, but it's been discussed there, but it's not been taken forward yet. So I don't have an answer to that, but I hope sooner rather than later. But something needs to catalyze that.
So you think that will be the big game changer?
I think there's, and linked to that, there is an underlying need for more trust. Trust amongst brands, trust on the data, trust in the whatever is being offered. Even, I think from a creative standpoint, when brand building happens, you're building trust. Because in a highly fragmented situation, it's almost jo dikhta hai wo bikhta hai. So you keep on salience, and then you go and pick it up. Whereas you have to make it easier for consumers to actually exercise brand choice by actually building brand love, brand trust, whatever you want to call it. Similarly, build trust on the numbers that you share, all of that. I think that's what is, if you start making it, these are the great enablers for running a very stable and good marketing ecosystem.
Fair enough. Well, on that note, thank you so much for all these insights. And here's for all our sakes and the industry's sake, hoping for a much better 2024 than a 2023. And thank you so much.
Thank you.
Our pleasure.